Hey there, welcome back to my channel, it's me the Mind Injector. In this video we're diving into a hot topic that's been making waves in the tech world. Apple and its latest surge driven by artificial intelligence. But is everything as rosy as it seems, and could there be trouble ahead for the tech giant? Let's get into it. Apple has been on a remarkable run lately, with its stock bouncing back to the $200 mark and even hitting new all-time highs. The big driver behind this surge? Apple's ambitious plans to capitalize on the generative AI growth trend. At the 2024 Worldwide Developers Conference in June, Apple unveiled its Apple Intelligence platform, which aims to integrate AI across its apps, products, and operating systems. They also announced that OpenAI's ChatGPT will soon be available on Apple platforms. This news sent investors into a frenzy, leading to a classic buy on the rumor, buy more on the news scenario. Since the event, Apple stock has continued to climb, hitting new high water marks. But before we get carried away, let's take a step back and look at the bigger picture. While the AI announcement has brought a wave of optimism, there's an underlying issue that hasn't disappeared: demand headwinds for Apple's flagship product, the iPhone. Despite the excitement around AI, concerns about iPhone sales could resurface and potentially derail this rally. UBS analyst David Vogt has pointed out that iPhone sales and market share declines, especially in key markets like China and India, have persisted. Worse yet, the iPhone is losing market share in the US as well. While the integration of AI might spark renewed interest, it's not guaranteed to solve these problems. Another factor to consider is the competition. Apple's major competitors in the global smartphone market have already launched AI-compatible phones. There's also the risk of regulatory challenges, particularly with the US federal government's crackdown on AI software exports to China. If these restrictions extend to Apple's upcoming AI offerings, it could hinder their success in a crucial market. Given these challenges, there's a possibility that the current AI-driven rally could lose steam. If the market refocuses on the negatives, such as slowing iPhone sales and regulatory hurdles, we could see a correction in Apple's stock price. So, what should investors do? While it's unlikely that Apple will plummet back to $150 or lower, a moderate decline could be on the horizon if the AI rollout doesn't meet expectations. For example, the stock could slide back towards its 52-week low of $164 per share. With the stock currently sitting comfortably above $220 per share, now might be an opportune time to take some profits. However, this doesn't mean you should abandon Apple entirely. The key is to stay informed and be strategic. Keep an eye on how Apple's AI initiatives develop and be ready to re-enter the stock at a more favorable price if the situation calls for it. Dollar cost averaging, DCA, is a great strategy to consider, allowing you to reduce your average cost basis over time and position yourself for long-term gains. Let's dive deeper into the various aspects that might impact Apple's stock and its future potential. Artificial intelligence has been a game changer across multiple industries, and for a tech giant like Apple, integrating AI into its ecosystem could open up numerous opportunities. Apple's Apple Intelligence platform is designed to enhance user experience by making its devices smarter and more intuitive. From Siri becoming more responsive and accurate to apps that can anticipate user needs, AI has the potential to significantly boost Apple's product appeal. However, the success of this integration heavily relies on how well it is executed. If Apple can seamlessly integrate AI into its devices and services, it could see a surge in demand across its product lines, not just the iPhone. But execution is key, and any missteps could dampen investor enthusiasm quickly. While the iPhone has been Apple's flagship product for years, the company has been diversifying its revenue streams. Services like Apple Music, iCloud, and Apple TV Plus have become significant contributors to its bottom line. Additionally, Apple's foray into financial services with Apple Pay and the Apple Card is noteworthy. These diversified revenue streams are crucial for Apple's long-term stability. They provide a buffer against fluctuations in iPhone sales and open up new growth avenues. As investors, it's essential to consider these aspects and not just focus on the iPhone's performance. The company's ability to innovate and expand into new markets can sustain its growth trajectory. Investor sentiment plays a significant role in stock performance. The current optimism around AI has driven Apple's stock to new heights. but sentiment can be fickle. If the broader market faces headwinds or if there's a sector rotation away from tech stocks, Apple's stock would be impacted. It's also important to watch how other tech giants are performing. Companies like Microsoft, Google, and Amazon are also heavily investing in AI, and their advancements could influence investor sentiment towards Apple. Staying informed about market dynamics and competitor activities is essential for making well-timed investment decisions. Apple operates in a highly regulated industry, and any changes in regulatory policies can impact its business. The recent crackdown on AI software exports to China is a prime example. If similar restrictions are placed on Apple's AI initiatives, it could hinder its growth in one of its largest markets. Moreover, Apple's global expansion plans, particularly in emerging markets, face several challenges. These include local competition, regulatory hurdles, and economic instability. For instance, while India presents a significant growth opportunity, the competitive landscape is fierce and regulatory compliance can be complex. Before we get into the exciting details, let me introduce you to Moomoo Financial. If you open a brokerage account with Moomoo and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just one, but 5 free stocks worth up to $2,000 each. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So, sign up now using the link in the description and get those free stocks. Now, let's get back to the video. Apple's success has always been driven by its ability to innovate. Whether it was the introduction of the iPhone, the iPad, or the Apple Watch, the company has a track record of creating products that define categories. The AI-driven features and products could be the next big thing, but it's essential that Apple continues to push the envelope. Investors should look for signs of ongoing innovation, such as new product announcements, patent filings, and strategic acquisitions. These indicators can provide insights into Apple's future growth potential and its ability to stay ahead of the competition. Despite the current optimism, it's important to remember that Apple's stock is trading at a premium. The forward price-to-earnings ratio and price-to-sales ratio are higher than the industry average, which means that a lot of positive expectations are already priced in. Apple's financial health remains robust, with a strong balance sheet and significant cash reserves. This financial strength allows the company to invest heavily in R&D, acquisitions, and other growth initiatives. However, investors should be cautious and ensure that the stock's valuation aligns with their investment goals and risk tolerance. In the end, while Apple's recent AI-driven rally is exciting, it's essential to remain cautious and consider the underlying challenges. By staying informed and using strategies like dollar-cost averaging, you can navigate the volatility and potentially capitalize on future opportunities with Apple. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like, and leave a comment down below.